Let me welcome on board Abhishek Goenka and find out where the rupee situation is actually going to settle down, if at all. Abhishek, hi, morning. What is your sense on the currency weakness? While, of course, we've not seen much RBI intervention, barring, I think, day before when they stepped in and, the rupee didn't quite slip to 90. But what next?
And, the very sparingly and let it find its true level. And unfortunately, at this point of time, neither the current account nor the capital account is in our favor. And right now, we are seeing that run of rupee like we see every 2-3 years. But I don't think this is something which something needs to be right about. Broadly, the max that we take is around 3% depreciation. This time around, it's close to around 6%. And the rupee is clearly undervalued by around 3%. So I think in short term, the markets could go maybe 90 half, 91, it's anybody's guess. But in a medium term, with these inflation being so low, growth being fine, and current account will also settle down once gold imports come down. And we ought to believe that there is going to be some kind of a trade deal going to happen. So once all these things find its play, I think rupee is going to find its true level. I think that's close to around 88 to a dollar. And I think these are good levels to actually start booking long-term positions of exports, especially for exporters who are active in the market.
We also have Jayesh Mehta of DSP Finance joining us. Jayesh, it seems from the government that they're not losing sleep over the rupee depreciation. What's your take on how the rupee is going to fare from here?
So I think, everybody is now trying to find the reason and, valuation and RER and all the stuff, right? But the reality is trade balance and tariff wars and stuff like that. The reality is, I think the macro, in spite of tariff war, is all great, right? The Indian macro definitely looks great. What we are struggling right now is a continuous outflow of FPI flow, which RBI since last 2 years, right? If you look at it on an average, 80% tail is like almost 2,500 crores per day. So it's like almost like $1.25 billion in a week, which is like $5 billion a month, right? That kind of outflow, which RBI last year thought would be short term, and they were trying to defend that, and therefore at that point of time they were defending 83, 84. Then that let it go, and then slowly moved to 87, 88 range, and then last Friday they let go 89, and now they are there, but they are not defending a level, but they are more like a speed breaker, right? And but you see, it was just the FPI outflow. Now we have FPI outflow plus IPOs where FDI outflows are happening. Huge FDI outflows are happening where private equity guys are selling off in the IPO. And to top that up, last 2 months, that is October, deficit for gold has been highest, as well as your China import has been higher this year to date as compared to last year. So I think all that put together is definitely creating a pressure on outflow of dollars. And therefore, one has to be cautious as to, do you stand like a rock or a wall, or do you let it be a speed breaker? And I think they have chosen now to go be a speed breaker till we know the definite picture, right?
Jayesh, rupee is always RBI's responsibility, and we have an MPC meet underway and the decision expected on Friday morning. What do you think RBI will do?
So I think there are a lot of people saying that because of rupee, RBI may not do anything on the rate. I think because the inflation is so low, they will have to react on the rate and they will have to cut the rate. As far as India is concerned, India is not classically, as the theory says, you want the currency to be strengthening, so your interest rate has to be higher, therefore foreign flows come. In India, we have large foreign flows are more equities, right? And when you raise rate, it is not conducive for equity market. And therefore, India always worked differently. And I think we saw that in 2013-14, where we raised the rate, it didn't really help, right? So raising rate is theoretically classic thing to say that, it will get you foreign debt flows. But in India, foreign money is not debt. Foreign money is more equity. And therefore, it actually works counterintuitive in India. So I feel that they should go ahead with that.
Abhishek, what's your take? Do you believe? Hi, firstly, good morning. This is Harsha. Do you believe that further slip up from here possible, and if so, how much?
Not sure. Well, it's anybody's guess. But technically, obviously, the levels of 90.75 are the first levels that possibly rupee could go. But as I said, we are entering into a zone where we could see some announcements coming from either India or US, something to stop this free fall. And I think our fundamentals, as Jayesh Bhai was saying, is pretty okay. I don't think we should be reading too much in the news right now. And I think we should start thinking contrary at these levels.
And Jayesh, if I can come to you, what's your sense on this piece? Do you believe that a further slip up likely, and if so, how low would the RBI be willing to go?
I really don't know. So normally I have been more bullish on rupee, but this time around I'm also a little bit spooked up because while all of us are waiting for tariff deal to happen and therefore, but does the happening of tariff deal bring in FPI flow back, or does that stop the FDI outflow which happens because of the IPOs, right? That's where my worry is, and if they don't come back, there will be pressure, right? See, normally, if you look at traditionally earlier, like $10 price increase in crude will impact your currency immediately. But that was 10 billion. $10 increase is like $10 billion over a year. Here we are talking about $5 billion a month, right? If that kind of outflow continues happening, and that's where I get a little worried because even before the tariff thing happened, right, before the August 50% and before the April any tariff talk, right, there was continuously outflow in India. So I think it will depend a lot on the FPIs on the equity side. And trust me, I haven't got the answer. I've been talking to all the equity experts as to why this outflow, but I haven't got the answer for that.
Just try looking at what's happening in China and Brazil. Maybe the answer lies there. But great to be speaking with you.
You see, if it is just outflow, I can understand, right? See, it's like 2,500 crores outflow, but there is 18,000 crore purchase, 20,000 crore, 28,500 sales, right? 15,000 crore purchase, 17,500 crore sales. So who's buying? I can understand if it's 1,000 crore purchase, 3,500, then you don't like India, blah, 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 and other stuff, right? But there is also purchase coming in. So if you look at the gross number, there is purchase coming in, but the outflow is definitely there on a net basis, right?
If you look at from the corporate point of view, they're also raising funds in rupee-based bonds and not dollar-based bonds, unlike previous years where we see a lot of fundraising happening in dollar.
That's because LIBOR's moved up, right? So basically, overall the global rates, like the base rate, like risk-free rate itself has moved from 0.5% to 4.5%, right? 4%, right? So
Right, absolutely.
Oh
yeah, absolutely. Much to talk about, but for a later day. Equity markets are going to open in just 2 minutes. So Abhishek, Jayesh, both of you, thank you so much for your time today. Great to be speaking with you. Counting down to the market open.